Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for NMP TV, brought to you by our friends at PRMG. They're working for your best interest. And speaking of your best interest, man, did interest rates make an important move last week. Mortgage-backed security pricing breaking underneath a really important floor at their 200-day moving average. Looks to me like they're going to take a little bit of a move lower. And maybe at that point in time, this decline that we've seen in price, this move up that we've seen in rates, will at least temporarily have exhausted itself. I want you to watch an important level in the 10-year Treasury. There's two of them, and that is 1.19 in the 10-year Treasury. As we record this for you, battling that level right now. If it breaks above there, wouldn't be surprised to see it go to about 1.25. And then I think it runs into a little bit of a tough go for yields to go much higher than that. But that does mean we could see some more erosion in mortgage-backed security pricing. And at that point, I do expect a little bit of a relief rally. That clearly would be helped if the stock market ever settles down and takes a breather and we see some of that money flow into the bond market. So for now, it's time to be cautious and having that cautious approach. Last week, got some numbers on inflation. Heck, nowhere to be found. People keep talking about inflation, but the thing of it is that we see some inflation in the goods sector, but we don't see it in the service sector. And a lot of people are saying that, hey, you know what, when the masks come off, when we get back to work, then we're going to see big inflation. I don't think so. I think that the goods sector of inflation calms down because people will be going back to work, helping the supply chain. We might see a little bit in the service sector. I think it levels itself off. I think we're going to be okay. We did get some auctions last week, and those auctions were met with a pretty good appetite. We had a lot of interest in the 10-year Treasury. Thank goodness, otherwise yields would be higher. And it was predominantly from foreigners. Why do foreigners do this? Because what happens is the US dollar has been plummeting, and that's good for our exports, but not so good for foreign nations. So the way they combat this is by taking the money that we send them to purchase some of their goods, and what they do is they take that, they repatriate it by buying our treasuries, and that helps to stabilize their currency against it, helps the dollar not decline as much. We get the benefit that it helps us as far as interest rates go. So I think that while we could temporarily see this little move higher, I feel that they will cycle back down. I'm not as worried. Now this week, not a lot of moves with regard to interest rate, but there will be a lot of news as far as housing goes. And the housing data that we're going to be seeing, I think will continue to underscore just tremendous strength in housing along with big lack of inventory. Housing market's going to continue to be strong. You've been hearing it from me for a long time when everybody else was a naysayer. I think that you're going to continue to see that a lot of people talking about affordability now. Don't buy into it. It's more affordable now than it was a year ago because not only are rates lower, but incomes are up. They're up 7.5% per year on a weekly basis. And since you only use a fraction of your income, you're going to be able to support much higher levels of appreciation, 15, 20, 25%. And guess what? The market becomes even more affordable. I know it sounds crazy, but when you do the math, you'll see it. If you're a member of MBS Highway, this is what we do. We show you this stuff. Not only do we show it to you, we give you presentations that you can teach others, do videos with it. Boy, right now, it's a good time. But it's a good time to invest in yourself. Invest in the most important asset you have, your brain. And that asset will withstand a lot of this competition you're going to be seeing from fintech, who is really flush with cash now, and they're coming after you. If you listen to Richard Barton from Zillow the other day, really wants to make the mortgage originator obsolete. Don't let that happen to you. Get on MBS Highway, put yourself in a position of strength, get your certified mortgage advisor designation, and be at the top of your field. You deserve it. Talk to you soon. Bye-bye.
Be sure to click on the link below for your free 30-day MBS Highway trial.